Hi everyone, in this video we'll be going over A-Levels Accounting 2022 October-November paper 1-1. So this is a multiple choice paper which consists of 30 questions and we're given a time limit of 1 hour. And in this video as well, we will be attempting to solve this paper under 1 hour. Now without any further delay, let's get started. For the first question, we need to figure out for which items does the cash book act as a book of prime entry. So remember that cash book only records all of our cash transactions. So we just need to figure out whether the given items involve cash transactions or not. So the very first one is payments to suppliers, which means that we paid out cash, which is a cash transaction which should be recorded in the cash book. So the first item is correct. Then the second one is purchase of a non-current asset on credit. So we purchased some good, but it is on credit, which means that there has been no cash involved in this transaction. So this will not be recorded in our cash book. The third one is receipts from customers, which means that the company received cash from the customers, which is a cash transaction. So this will be recorded in our cash book. 3 is correct. And the fourth one is returns outward. So we just returns goods to our suppliers, which does not involve any sort of cash. So this should not be recorded in our cash book, which means that the only items that we will be recording in the cash book will be 1 and 3, which is given in option B. So that will be the correct answer. This concludes the first question. We can now move towards the second one. We need to figure out which statements about the reducing balance method of depreciation are correct. The first one is that the annual percentage depreciation rate changes each year. This is incorrect because when we're given a rate for depreciation, whether it be the straight line method or reducing balance method, the annual percentage depreciation rate is constant each year. So the first statement is incorrect. The second one is that the annual depreciation charge remains the same each year. We're talking about reducing balance method, which means that the formula for annual depreciation is just the cost minus the accumulated depreciation times our rate. And each year our accumulated depreciation value increases because the previous year's depreciation will be added as the accumulated depreciation for this year's depreciation charge, right? If one of the values increases each year, then this just means that the total value will also differ each year. So we cannot say that our annual depreciation charge remains the same each year. This is again an incorrect statement. Then the third one states that the annual percentage depreciation rate remains the same each year. We're talking about the rate which should be constant each year. So this statement is actually correct. Then the fourth one is that the annual depreciation charge falls each year. Like I said before, the accumulated depreciation value increases each year, right? And when a negative aspect of any formula increases, the total value falls down, which means that our annual depreciation charge falls each year, which is correct. So this statement is also going to be correct, which means that we're looking for 3 and 4, which is given in option D. So that will be the correct answer. This concludes the second question. We can now move towards the third one. On 1st April 2021, a business purchased a machine for 120,000. This is the cost with an estimated residual value of 12,000. So this is the residual value. On 1st July 2022, the machine was sold for 100,000. Alright, machinery is depreciated at the rate of 20% per annum using the straight line method, and the depreciation is calculated for each month of ownership. Now we need to figure out which entry should be made in the provision for depreciation of machinery account for the disposal of the machine. So let's figure out the number of months for which we use this machine. So we purchased it on April 2021. So that's April, May, June, July, August, September, October, November, December, January, February, March, April, May, and June, because we're selling the machine on 1st July. So these are the total months. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, which means that we need to charge our depreciation for 15 months. Let's figure out the depreciation for 15 months. Okay, so firstly, we will start by figuring out the depreciation charge for 1 year, which is 12 months. We start with our cost of 120,000. And we are figuring out our depreciation using the straight line method, which means that we need to adjust our residual value as well. So we need to subtract this residual value of 12,000. So that's minus 12,000. And then apply the rate, which is 20%. So that's times 0.20. And this gives the depreciation charge for 12 months. So I'm just going to divide it by 12. Now this will be the depreciation charge for 1 month, and we're trying to figure out the depreciation for 15 months. So we can just multiply it by 15 in order to figure out the total depreciation for 15 months. So that's going to be 120,000 minus 12,000 times 0.20 times 15 by 12, which results in our depreciation for 15 months to have the value of 27,000. Okay. And we need to figure out the entry which would be made in the provision for depreciation of machinery. And whenever we're preparing the provision for depreciation of machinery, we put our total accumulated depreciation of the disposed asset on the debit side, which means that our entry is just going to be 27,000 on the debit side. And this is given in option D, so that will be our correct answer. This concludes question number 3. We can now move towards question number 4. Sue purchased a new machine. She depreciated it at a rate of 40% per annum using the reducing balance method, which means that we charge the depreciation to the difference between cost and our accumulated depreciation, which is the net book value. And after 2 years, its net book value was 3,600. We need to figure out the purchase price or the cost of the machine. Okay, so let our C be the purchase price or the cost, right? Then let's figure out the depreciation for first year. In the first year, we do not have any accumulated depreciation, so our cost is equivalent to the net book value. So we can just charge our depreciation rate to the cost, and we can see that the depreciation rate is 40%, which we can write down as 0.40. So the depreciation for first year is 0.40C. Now let's figure out the depreciation for second year. That will be cost minus accumulated depreciation, and the depreciation for previous years will act as the accumulated depreciation, which means that 0.40C will be the accumulated depreciation for second year. And then we just multiply it with the rate of 0.40 again. So that's C minus 0.40C, which results in 0.60C times 0.40, which results in 0.24C. Okay, let's figure out the accumulated depreciation because we're given the net book value after 2 years. Okay, so the accumulated depreciation is just the depreciation for first year, which is 0.40C, plus the depreciation for second year, which is 0.24C. And this gives the total accumulated depreciation of 0.64C. Okay, now let's figure out the net book value. That is just the difference between cost and accumulated depreciation. Our cost is C, and we just figured out that our accumulated depreciation is 0.64C. And we also know that the net book value is 3,600. So let's substitute this value. And C minus 0.64C results in 0.36C. Now we can easily figure out the value for C. That is just going to be 3,600 divided by 0.36, which results in value of 10,000. Which means that our purchase price has the value of 10,000. And this is given in option C, so that will be the correct answer. This concludes question number 4. Now we can move towards question number 5. Which items will be included in the sales ledger control account? Okay, so the very first one is amounts owed by credit customers at the end of the previous month. So at the end of the previous month is basically our opening balance for this month's sales ledger control account, right? So this is obviously included on the debit side. Then the second one is provision for doubtful debts. Remember that we only include bad debts incurred and not the provision for doubtful debts. So this does not exist in our sales ledger control account. The third one is total of the invoices sent out to credit customers. This is just equivalent to the total amount for credit sales, which we record on the debit side of our sales ledger control account. So this is included. Then the fourth one is total of the sales returns journal. And sales returns obviously decreases the value owed by credit customers. So this is always recorded on the credit side in our sales ledger control account. So the correct items are 1, 3, and 4, which is recorded in option C. So that will be our correct answer. This concludes question number 5. Now we can move towards question number 6. We need to figure out which error would affect the balancing of a trial balance. So the first one is a payment of rent of 250 had been debited in the bank account and it had been entered correctly in the rent account. So the correct entry would be credit in the bank account, right? So we only made an error in one side, which will be reflected in our trial balance. So this is the actual error which would affect the balancing of a trial balance, which means that option A will be the correct answer. But let's have a look at the remaining options as well. For option B, a purchase invoice of 259 was entered in the purchases journal as 295. So we just flip the numbers. And this is an error of transposition. An error of transposition is not reflected by the trial balance. So this will obviously be incorrect. The third one is a sales invoice for 180 was lost before it could be entered in the sales journal. So this is just the error of omission, which is again not reflected by the trial balance. So this is also incorrect. And the fourth one is a sales return of 500 was debited in the customer's account and credited to the purchases returns account. We're talking about a sales returns, but we recorded the entry as the purchases returns account. And as the purchases returns account, this entry seems correct, right? So this error will not be reflected by a trial balance. So this is again incorrect. This concludes the sixth question. We can now move towards the seventh one. The balance on a purchases ledger control account at 1st March was 71,300. During the month ended 31st March, the following transactions took place, and we need to figure out the trade payables balance at 31st March, which is just the closing balance for purchases ledger control account. So I'm just going to prepare the purchases ledger control account right here. This is the debit side and this is the credit side. We have our opening balance, and the opening balance in the purchases ledger control account is always recorded on the credit side. So that will be 71,300. Then the first transaction is the payments to trade payables by check. So the payments made to trade payables will reduce the total amount owed to the suppliers, which means that this will be recorded on the debit side. So that's 133,200. Then we have credit purchases, which increases the amounts owed to our suppliers, which will be recorded on the credit side. So that will be 149,000. Then we have purchases returns, which will reduce the amount owed to our suppliers. So this will be recorded on our debit side. Then we have cash purchases, which will not be recorded in purchase ledger control account at all because we only record our credit purchases. So we can just ignore this amount. Then we have contra with the sales ledger, and contra is always recorded on the debit side in case of purchases ledger control account. So that's 1,600. Now we just need to figure out our closing balance, which will be right here. And in order to figure out the closing balance, we require the total first. So we'll figure out the total from the credit side. That will be 71,300 plus 149,000, which results in 220,300. The total will be the same for the debit side as well. And now our closing balance acts as the balancing figure. And whenever we're trying to figure out the balancing figure, we just need to subtract these amounts from the total. And in this case, that will be 220,300 minus 133,200 minus 3,000 minus 1,600, which results in our closing balance to have the value of 82,500. This is the answer we're looking for, and it is given in option B. So that will be the correct answer. This concludes question number 7. We can now move towards question number 8. We need to figure out which statements about accruals and prepayments are correct. So we're told that accrued revenue at the end of an accounting period is recorded as a current asset. Let's talk about accrued revenue. Accrued revenue is just the revenue that we are yet to receive. So this is just our receivables, right? And we know that all of our receivables are current assets. So this statement is correct. Then the second one is accrued revenue at the end of an accounting period is recorded as a current liability. So once it is a current asset, it cannot be current liability. So this statement is automatically incorrect. Then we have prepaid expenses at the end of an accounting period are recorded as a current asset. Let's talk about prepaid expenses. So these are the expenses for the next accounting period that we have already paid, which means that we are yet to receive the benefits for these payments. Again, this is a receivable. And receivables are always current asset. And this statement states that it will be recorded as a current asset, which means that this is correct. And the fourth one is prepaid expenses at the end of an accounting period are recorded as current liability. Again, once it is an asset, it cannot be a liability. So this statement is automatically incorrect. So the only correct statements are 1 and 3, which is given in option A. That will be the correct answer. This concludes question number 8. We can now move towards question number 9. We're told that a business has a bank overdraft of 4,800. Bank overdraft just means the negative balance in our bank account. Then it pays for materials invoice 3,000, less a trade discount of 20% and a settlement discount of 5%. A check of 500 is received from a credit customer. We need to figure out the bank balance after these transactions. Okay, so the starting balance is 4,800 but negative. Then we paid for the materials. So let's figure out the total paid amount. We paid 3,000 after receiving a trade discount of 20%, which means that we discounted. So that's 1 minus 20%, which can be written down as 0.20. And again, we got a settlement discount of 5%. Again, that is a discount. So that's 1 minus 5%, which you can write down as 0.05. So that is just 3,000 times 80%, which is 0.80, times 95%, which is 0.95. So the total amount paid for materials invoiced is 3,000 times 0.80 times 0.95, which is 2,280. And remember that this is the amount paid, which reduces our bank balance. So that's again a negative 2,280. And finally, a check for 500 is received. So this is added into our bank account. So we need to add it plus 500. Now this gives our total bank balance to be negative 4,800, negative 2,280 plus 500, which results in negative 6,580. Again, there is a negative, which means that this is an overdraft. So the correct answer we're looking for is 6,580 overdraft, which is given in option B. That will be the correct answer. This concludes question number 9. We can now move towards question number 10. We need to figure out how our closing inventory and the loss for the year is treated in the financial statements of a sole trader. So if we're talking about closing inventory, in our statement of financial position, it is treated as an asset, right? And we have income statement. And in income statement, we add our closing inventory. And all of our added items will be on the credit side in case of the income statement, which means that we're looking for asset in statement of financial position, which is given here and here. And we're looking for credit in income statement, which is given here. So option A is correct and B is correct as well, if we're looking for closing inventory. Now let's talk about loss for the year. And we're given capital account. Okay, in capital account, we know that losses always reduces our total capital, and the reduction in capital is always recorded on the debit side, which means that loss will be recorded in the debit side in case of our capital account. That is given in A and C. And the next thing is our income statement. And in the income statement, our losses are credited and our profits are always debited. So we're looking for credit in income statement, which is given in A and C. So the correct options for both closing inventory and loss for the year is given by option A, which means that that will be the correct answer. This concludes question number 10. We can now move towards question number 11. A trader had the following closing trade receivables. Okay, for year 1, that's 64,000. For year 2, that's 80,000. For year 3, that's 90,000. He usually provides for doubtful debts at the rate of 5%. At the end of the year 2, he forgot to adjust the provision. We need to figure out the effect on profit in year 3 of forgetting to adjust the provision in year 2. First of all, let's figure out the provision for all 3 years. That is just going to be 5% of these amounts, right? So for year 1, that's 64,000. Times 5%, which we can write down as 0.05, which results in the amount of 3,200. For year 2, that's 80,000 times 0.05, which results in the amount of 4,000. For year 3, that's 90,000 times 0.05, which results in an amount of 4,500. And remember, whenever we are trying to adjust the provision for doubtful debts, in order to figure out the profit, we compare it with the previous year's provision, right? So we're told that we forgot to adjust the provision in year 2. So completely skipping this value, for year 3, we would compare our provision with that of year 1, right? And as compared to these values, we can see that in year 3, the provision has increased, and the increment is of 4,500 minus 3,200, which results in 1,300. And this increment in the provision for doubtful debts is always recorded as an expense in order to figure out the profit, which means that this will be treated as a negative balance in order to figure out the profit, right? So what we did is we subtracted 1,300 in order to figure out the profit. But actually, we should be comparing this provision with that of the second year, which is 4,000, right? And if you were to compare it with that of second year, we can see that there is again an increment, but this time the increment is of 4,500 minus 4,000, which is 500. Again, this is an increment which should be treated as an expense in order to figure out the profit. So the correct entry would have been negative 500. Now, in order to figure out the effect on profit, we just subtract our correct entry from the incorrect one. And in this case, that will be negative 1,300 minus 500. So that's going to be negative 1,300 plus 500, which results in negative 800. So this negative represents a decrease, which means that the correct answer that we're looking for is 800 decrease. And this answer is given in option A, so that will be the correct answer. This concludes question number 11. We can now move towards question number 12. The following information is available for the year ended 31st December 2021. We are given the revenue, inventory at 1st January 2021, which is the opening inventory, and inventory at 31st December 2021, which is the closing inventory. We're also told that the trader uses a markup of 60% on all purchases. So a markup of 60% just means that we're adding 60% of cost of sales, so that's 0.60 times cost of sales, in order to figure out the revenue. So this just means that 1 cost of sales plus 0.60 cost of sales, that's 1.60 cost of sales, is equivalent to the total revenue. And we need to figure out the value of purchases. So let's figure out the value for cost of sales. That is going to be revenue by 1.60, and we're already given the value for revenue, which is 1,400,000. So our cost of sales is just going to be 1,400,000 divided by 1.60, which results in the value of 875,000. Okay, now cost of sales is 875,000. Let's write down the formula for cost of sales. We start with our opening inventory, add purchases, and subtract the closing inventory. And we are already given the values for opening inventory and closing inventory, which means that we can easily figure out the value for purchase. We have our opening inventory to be 140,000 plus purchases minus the closing inventory value is 148,000. And this is equal to 875,000. Now we can easily figure out the value for purchase. That is just going to be 875,000 minus 140,000 plus 148,000. This results in the value for purchases to be 883,000. This is the answer we're looking for, which is given in option D. So that will be the correct answer. This concludes question number 12. We can now move towards question number 13. The following information is available for a business for the year ended 31st March 2022. We are given the non-current asset at cost at 1st April 2021, provision for depreciation on non-current assets at 1st April 2021, expenses paid by cash and checks during the year, expenses prepaid at 31st March 2022, which is the closing date, and trade receivables at 31st March 2022. Then we're also told that a provision for doubtful debts is to be created at 2% of trade receivables. Depreciation on non-current assets is to be provided at 20% using the reducing balance method. We need to figure out the total of the expenses for the year. Okay, so the very first expense would be provision for doubtful debts. Let's figure it out. That is just going to be 2% of trade receivables, and we are given the trade receivables value to be 25,000. So that is going to be 25,000 times 2%, which is 0.02. This gives our provision for doubtful debts to have the value of 500. And remember that provision for doubtful debts is also an expense. So let's add it here. Now the next step would be to figure out the depreciation on non-current assets. This uses a reducing balance method. So I'm just going to prepare the depreciation right here. And under reducing balance method, we need to subtract our accumulated depreciation from cost in order to figure out the net book value. We can see that our cost is 62,000. And our provision for depreciation or the accumulated depreciation is 12,000. So we just need to subtract it and then apply the rate of depreciation, which is given to be 20%. So that's times 0.20. And this gives our depreciation charge for the year ended 31st March 2022 to have the value of 10,000. And depreciation is also an expense, so let's add it here. Okay. And next we're given expenses paid by cash and checks during the year, which is 42,200. So let's add it as well. But we need to adjust the expenses prepaid because these are the expenses paid for the next year, which should not be included in the expenses for this year. So we need to exclude this, which just means that we need to subtract this value of 4,600. And this concludes everything. So our total of the expenses for the year is going to be 500 plus 10,000 plus 42,200 minus 4,600, which results in the value of 48,100. This is the correct answer, which is given in option B. This concludes question number 13. We can now move towards question number 14. X and Y are in partnership but do not have a partnership agreement. Alright, X has introduced twice as much capital as Y and made a loan to the partnership. X insists he is entitled to the following. We just need to figure out which of these is X entitled to. So the first one is interest on the extra capital he has invested. We know that there is no partnership agreement, and in case of no partnership agreement, no interest is allowed on capital. So this he is not entitled to. Then the second one is interest on the loan he has made to the partnership. Under no partnership agreement, interest on the loan is fixed at 5%, which means that X is entitled to the interest on the loan he has made to the partnership at 5%. This is correct. The third one is the profit share of double that of Y. Under no partnership agreement, the profits are shared equally among the partners. So he will not be entitled to double profit share. So that's incorrect. And the fourth one is not to pay interest on his drawings. Again, we have no partnership agreements, which means that interest on drawings are not applicable. So this is also true. So the correct entitlement is of 2 and 4, which is given in option C. This concludes question number 14. We can now move towards question number 15. L, M, and N share profits equally and is retiring, and net assets at net book value of 27,000 are revalued at 36,000. Let's figure out the profit on revaluation. And this is a profit because the value has been increased, right? So the new value is 36,000 and the previous value was 27,000, which means that the profit on revaluation is of 9,000. All right. Goodwill is valued at 18,000 but will not be recorded in the books of accounts. After N retires, L and M will share profits in the ratio 3:2. We need to figure out the change to L's capital account. Okay, let's prepare the capital account. Let's assume that the opening balance is X for L. Then we have profit on revaluation, which will increase their capital balances, and this profit is shared equally among 3 partners. So for L, the profit will be 9,000 by 3, which is 3,000. This profit will be recorded on the credit side, so that's 3,000. Then the goodwill at previous ratio will be recorded on the credit side, and previously the ratio was to share equally among the 3 partners. So the goodwill under previous ratio is 18,000 by 3, which results in 6,000. This will be recorded on the credit side, and the goodwill on the new ratio will be recorded on the debit side. So that's 18,000, and from the new ratio, 3 out of 5 parts belongs to L. So that's 18,000 times 3 by 5, which results in the amount of 10,800. This should be recorded on the debit side. Okay. These are everything that needs to be recorded. Now we just need to figure out the closing balance. And in order to figure out the closing balance, we first require the total, which we can calculate from the credit side. That's X plus 3,000 plus 6,000, which is X plus 9,000. And for debit side as well, that is going to remain the same. Now the closing balance acts as the balancing figure, and in order to figure out the balancing figure, we just need to subtract this amount from the total. In this case, that's X plus 9,000 minus 10,800, which results in X minus 1,800. So we can see that previously the balance was X, but now it has been decreased by 1,800. So the correct answer we're looking for is 1,800 decreased. And this value is given in option A. So that will be the correct answer. This concludes question number 15. We can now move towards question number 16. Dele and Iabo are partners and share profits in the ratio of 3:1. Their profit for the year is 80,000, and we are given the information regarding interest on capital and interest on drawings. We need to figure out the residual profit. Okay, in order to figure out the residual profit, we need to prepare the appropriation account, where we start with profit for the year. And it is given to be 80,000. The next step would be to adjusting the interest on capital. And interest on capital is something that the partnership pays to the partners, which means that it will reduce the residual profit, right? So we need to subtract the interest on capital. That is 3,000 for Dele. We need to subtract it, and 2,500 for Iabo. We again need to subtract it. Then the next one is interest on drawings, and interest on drawings is something that is paid by the partners to the partnership, which means that this amount will increase our residual profit. So that's plus interest on drawings, and that's 500 for Dele and 1,000 for Iabo. Okay, we do not have any sort of salaries, so this concludes our appropriation account. We can now figure out the residual profit. That is the sum of these 5 amounts. So that's 80,000 minus 3,000 minus 2,500 plus 500 plus 1,000, which results in 76,000. Now we need to divide it among our partners on the basis of this ratio, that's 3:1. So for Delay, they will receive 76,000 times 3 parts out of 4 parts, so that's times 3 by 4, which results in their share of profit to be 57,000. Then we have Iabo, that's a total of 76,000, and their profit sharing ratio is 1 part out of the 4 parts, so that's times 1 by 4, which results in their share of profit to have the value of 19,000. So the correct answer we're looking for is 57,000 and 19,000, which is given in option A. So that will be the correct answer. This concludes question number 16. We can now move towards question number 17. W Limited made a loss for the year. The directors wish to increase the balance on the retained earnings account. How can they do this? The first one is increased dividends paid. So dividends paid are subtracted from the retained earnings, and if we increase the amount to be subtracted, then the total balance on the retained earnings account will decrease, and we are wishing to increase it, so this is incorrect, right? Then the second one is to issue new ordinary shares at a premium. Whenever there is new ordinary share issuance at a premium, it does not affect our retained earnings at all. So we cannot increase the balance on the retained earnings by issuing new ordinary shares. That is incorrect. And the third one is to make a transfer from general reserve. So what we do during transfer from general reserve is that we take a certain amount from general reserve and put it in our retained earnings, which will increase the balance on the retained earnings. So this is the correct one. So our correct answer is 3 only, which is given in option D. This concludes question number 17. We can now move towards question number 18. The following items were taken from the financial statements of a limited company during a period. We are given the increase in trade receivables of 6,000, increase in trade payables of 4,000, and loan repaid of 10,000. We need to figure out the effect of these items on the net cash inflow or outflow for the period. Okay, let's talk about increasing trade receivables. We know that trade receivables is an asset, right? So we're basically looking at increasing asset. And let me give an example using machinery. So if there is an increase in machinery, this just means that the company purchased the machinery, right? And whenever we purchase something, we need to pay the cash out, which means that any increase in asset results in cash outflow. So increase in asset, this is cash outflow. So this is a negative cash balance, right? So that's minus 6,000. Then we have increase in trade payables, which is a liability. Let me give an example using loan. So whenever there is an increment in loan, this just means that we took more loan from the bank. And when we have access to loan, it just means that we have extra access to cash. So any increment in liabilities results in cash inflow. And we are again looking at an increase in liability, which means that this is an inflow, so this should be added. Then we have loan repaid. Whenever we repay the loan, we need to repay it with cash. So cash goes out of the company. This is cash outflow, which should be subtracted. Okay, so the total net cash inflow or outflow is minus 6,000 plus 4,000 minus 10,000, which results in minus 12,000. And this negative represents the outflow. So that's 12,000 outflow. This is the correct answer we're looking for, which is given in option C. This concludes question number 18. We can now move towards question number 19. The following information is available for a limited company. At 1st April 2021, the balance of the retained earnings account was 858,000. We're given some transactions for the year ended 31st March 2022. Again, this is also a transaction. So we need to figure out the balance of the retained earnings account at 31st March 2022. Okay, so let's prepare the retained earnings account right here. We start with our opening balance. And the opening balance is 858,000. Okay, then we're given profit from operations. But remember that we only add our profit for the year in our retained earnings. And profit for the year is just profit from operations minus our finance charges, right? And we're given the profit from operations right here to be 978,000. Now we need to subtract our finance charges, which is just the interest charges, right? And we're told that the debenture interest paid for the year is 100,000. Now this will act as the finance charges, so we just subtract 100,000. Let's see if we have any other interest charges. This regards ordinary share. This is a transfer. and this is an issuance. So this does not involve any sort of interest, which means that this concludes our calculations for profit for the year. That is 978,000 minus 100,000, which results in our profit for the year to be 878,000. This amount should be added in our retained earnings. So that's 878,000. All right. Then the next one we are given is ordinary share dividends paid, and dividends paid should be subtracted. The amount is 150,000, so let's subtract this. Okay. Then we're told that on 31st March 2022, the directors transferred 280,000 to a general reserve. So we're just taking 280,000 from retained earnings and putting it in a general reserve, which means that this reduces the balance on retained earnings, right? So this is minus transfer with the amount of 280,000. Okay. Then they also issued 250,000 bonus shares of 1 each using the general reserve. So for issuance of 250,000 bonus shares of 1 each, we require 250,000 times $1, which results in the total of 250,000, right? And as we transfer 280,000 to the general reserve, we can see that this amount can sustain the amount of 250,000. So this issuance of bonus share does not affect our retained earnings at all. So this concludes all of our transactions to be recorded in our retained earnings. We can now figure out our closing balance. That is just the sum of these four amounts. That's 858,000 plus 878,000 minus 150,000 minus 280,000, which results in our closing balance to be 1,306,000. This is the correct answer we're looking for, which is given in option B. This concludes question number 19. We can now move towards question number 20. What does return on capital employed measure for a business? So let's recall our formula for return on capital employed. That is just going to be profit from operations divided by capital employed times 100%. And capital employed is just the sum of our equity and non-current liabilities. So from this ratio, we can see that return on capital employed just measures the efficiency in order to generate the profit from operations from our equity and non-current liabilities. So this is what we're looking for. So option A mentions efficiency to generate profit from total assets. Total assets is not included in our formula at all. So this is incorrect. Efficiency is to generate profit from its total liabilities. We only include the non-current liabilities. So this is also incorrect. Efficiency to generate profit from its non-current assets. We do not include our non-current assets at all. So this is incorrect. And finally, we have efficiency to generate profit from its shareholders' equity, which is correct, and the non-current liabilities, which is also correct. So option D will be the correct answer. This concludes question number 20. We can now move towards question number 21. The following information was available for a business at the end of a financial year. We're given sales, opening inventory, and closing inventory. And we're also told that a business applies a markup of 20% on all goods purchased. And we need to figure out the inventory turnover in days. So the formula for inventory turnover in days is average inventory divided by cost of sales times the number of days in a year, which is 365 days. Okay, let's figure out our average inventory. That is just going to be opening inventory plus closing inventory divided by 2. And we have the values for opening inventory as well as the closing inventory right here. Let's substitute it. So that's 33,000 of opening inventory, 27,000 of closing inventory divided by 2, which results in our average inventory to have the value of 30,000. Let's substitute this into our formula. Now we require cost of sales, but we're not given any cost of sales here, but we are told that the markup is 20%, which just means that cost of sales plus 20% of cost of sales, so that's 0.20 times cost of sales, results in the total revenue. And 1 cost of sales plus 0.20 cost of sales is 1.20 cost of sales. This results in the total revenue, which is just the sales, and we have the value for sales to be 300,000, so let's substitute it. Now our cost of sales is just going to be 300,000 divided by 1.20, which results in the value of 250,000. Let's substitute this into our formula times 365 days. So our inventory turnover in days is just going to be 30,000 divided by 250,000 times 365 days, which results in 43.8 days. And we just need to round it off, so that will be 44 days. This is the correct answer we're looking for, which is given in option B. This concludes question number 21. We can now move towards question number 22. A business employs machine operators. Each machine operator works 36 hours a week. 1 unit of output takes 4 hours of labor. So 1 unit requires 4 hours. Okay. It also employs supervisors who can each supervise 10 machine operators. Production is currently 1140 units a week. How many more units can be produced each week before the company needs to employ an extra supervisor? Okay, we'll start with our total production units. We have units and now we just need to figure out the total hours worked in order to produce these units from this relation. Okay, we can see that 1 unit requires 4 hours and we're talking about 1140 units. So for 1140 units, we'll be requiring 4 times 1140 hours, which is just going to be 4560 hours. Okay, so this is the total hours worked. And we're told that each machine operator works 36 hours a week. So this just means that 1 machine operator works 36 hours. Let's reverse it. So that is just going to be 36 hours is worked by 1 machine operator. Then again, let's apply our unitary method. So 1 hour will be 1 by 36 machine operator, and we have the total hours of 4560. So for 4560 hours, that's going to be 4560 by 36 machine operators, which results in 126.66 machine operators. Okay. Then we are also told that it also employs supervisors who can supervise 10 machine operators. So if you are to round it off to the nearest 10, that will be 130 machine operators, which means that we have enough supervisors who can supervise 130 machine operators, but we're only currently utilizing 126.66 machine operators. And we are talking about the units that can be produced before we need to employ an extra supervisor. So we do not need to employ an extra supervisor for the additional difference between these two values. So that's 130 minus 126.66, which results in 3.33. So for additional 3.33 machine operators, our current supervisor can suffice, right? So we do not need to employ an extra supervisor. Now we just need to figure out the number of units that these 3.33 machine operators can produce. So what we know is that each machine operator works 36 hours a week. So per week, 3.33 machine operators is going to work 3.33 times 36 hours, which is 119.88 hours. And we also know that 4 hours is required to produce 1 unit. Now 1 hour will produce 1 by 4 unit. Now we need to figure out the units for 119.88 hours. So for 119.88 hours, the number of units is going to be 1 by 4 times 119.88. And this results in the total additional units to be 29.97. Let's round it off. That's going to be 30 units. This is the correct answer we're looking for, which is given in option B. This concludes question number 22. We can now move towards question number 23. What best describes a fixed cost? So fixed cost is something that is going to remain constant for a certain level or range of output, because we cannot compare the fixed cost for 100 units and 10,000 units, because in that way the storage cost might be extra. So that increases the fixed cost for 10,000 units as compared to the 100 units, right? So we always need to keep in mind that fixed cost is going to remain constant for only a relevant range of output. So we're looking for that. Option A states a part that stays the same and a part that changes as output increases. This is incorrect, because if it changes as output increases, that will be a variable cost, and we're talking about a fixed cost. Then the second one states the same cost per unit. So cost per unit, we're not looking at the constant cost per unit, we're looking at the constant total cost. So this is again incorrect. The third one is the same total cost for any level of output. Like I said before, the fixed cost cannot be same for 100 units and 10,000 units, because there might be an additional storage cost. So we're not looking for the same level of cost for any level of output. This is incorrect. And the final one we have is the same total cost for output with a relevant range. This is the correct one. This concludes question number 23. We can now move towards question number 24. what would result in the under-absorption of overheads. So if we are comparing the expenditure, it results in an under-absorption only when the actual expenditure is greater than the budgeted one. And if we're looking at the units produced, under-absorption exists when the actual unit produced is lower than the budgeted one. So we're just looking for these. So actual is more than the budgeted, which is given by C and D. And actual is less than the budgeted, which is given by A and C. And the correct for both expenditure and units produced is given in option C, so that will be the correct answer. This concludes question number 24. We can now move towards question number 25. A company has received an order to supply 3,000 pairs of safety glasses. The cost of production is shown below. We need to figure out the total cost of manufacturing this order. Okay, so raw materials, we're not given any sort of information regarding which pairs it relates to. So we'll just be assuming that this 975 relates to the total of 3,000 pairs. Okay, so that's 975. Then packaging for 50 pairs is 4.20. So for 50 pairs, the packaging cost is 4.20. But we need to figure out the packaging cost for all 3,000 pairs. Let's do that. For one pair, that will be 4.20 divided by 50. This is again the utilization of unitary method. Now for 3,000 pairs, that is going to be 4.20 divided by 50 times 3,000, which results in our cost for 3,000 pairs to have the value of 252. So that's 252. The next is direct labor at 8 per direct labor hour, and the total is 800. So this is just the total for 3,000 pairs. Then we have order setting up costs, which again is the total value. And then we have overhead absorption rate per direct labor hour. So this is the rate per one direct labor hour. Now we need to figure out the total direct labor hours utilized from this relation, because we are told that 8 is the rate per direct labor hour and the total is 800. So what we know is that the rate per hour times total hours results in the total cost, right? And we're given the rate per hour to be 8. We need to figure out the direct labor hours, and the total is 800. Now we can easily figure out the direct labor hours. That is just going to be 800 by 8, which results in 100. So we utilize 100 direct labor hours. Now we need to figure out the total overheads from this overhead absorption rate. So that's 6.25 for each direct labor hour. So our total overhead is just going to be 6.25 times the number of direct labor hours, which is 100. This results in the total of 625. So these are all of the costs. So now we just need to add these 5 amounts. That's 975 plus 252 plus 800 plus 100 plus 625, which results in the total of 2,752. This is the total cost of manufacturing this order to supply 3,000 pairs of safety glasses. And this value is given in option D, so that will be our correct answer. Now we can move towards question number 26. We need to figure out how is break-even point calculated in units. So the formula for break-even point is just the fixed cost divided by contribution per unit. This is what we're looking for. And this is given in option A. So that will be our correct answer. This concludes question number 26. We can now move towards question number 27. A company manufactures and sells a single product. The following information is available about a unit of the product. The following information is available about the unit of the product. We're given the selling price, direct materials, and direct labor. The supplier of direct materials has agreed to increase the trade discount from 10% to 20%. So this just means that this cost of direct material of 45 includes a trade discount of 10%. So let's figure out the direct material cost, actual cost. We're given the trade discount of 10%, so that's 1 minus 0.10, and this results in the value of 45. So our actual direct material should have been 45 by 1 minus 0.10, which is 0.90. This results in the actual direct material to be 50. And now instead of applying a trade discount of 10%, we should be applying a trade discount of 20%. So the new direct material cost is just going to be the total of 50 times our discount of 20%. So that is just going to be 1 minus 20%, which you can write down as 0.20. That's 50 times 0.80, which results in the new direct materials per unit to have the value of 40. So instead of 45, we now need to use the value of 40. Now we need to figure out the new contribution per unit. The contribution is just the difference between sales and variable cost. In this case, our selling price is 105. and the variable cost is direct materials of 40 and the direct labor of 30. So this gives our contribution per unit to be 105 minus 40 minus 30, which is also in 35. This is the correct answer we're looking for, which is given in option D. This concludes question number 27. We can now move towards question number 28. The fixed costs of a business increase. All other revenues and costs remain unchanged. We need to figure out what happens if output is unchanged. So we're talking about contribution per unit. So the formula for contribution per unit is sales minus variable cost. This does not involve fixed cost at all. And we're told that all other revenues and costs remain unchanged, which means that the contribution per unit will have no change. That's given in C and D. Then we have break-even point per unit. So the formula for break-even point is fixed cost by contribution per unit. We already figured out that the contribution per unit is not going to change, but we're told that the fixed cost is increasing. So if the value in the numerator increases, the total value will also increase, right? So this just means that our break-even point per unit is also increasing, which is given in C and D. Then we have margin of safety per unit. So the margin of safety per unit is just the total output minus break-even point. And we're already told that the output is unchanged. So this is going to remain constant, but we figured out that our break-even point is going to increase. And if the negative aspect of a formula increases, then the total value decreases, which means that our margin of safety per unit is going to decrease. That's given in A and C. So the correct option for all three, contribution, break-even, and margin of safety, is given in option C. That will be the correct answer. This concludes question number 28. We can now move towards question number 29. A business manufactures 3 types of products which all use the same material. The following information is available. Okay, we're given selling price, direct material, direct labor, variable overhead, and contribution. Direct material is in short supply, so our scarce resource is direct material. And now we need to figure out in which order should the products be manufactured to maximize the profits. So whenever we're looking at profit maximization in case of scarce resource, we need to figure out the contribution per scarce resource. And in this case, our scarce resource is the direct material, right? So we need to figure out the contribution per direct material. So we start with our contribution, that's 41 for X, and then divide it with our direct material, which is 56. So for X, that results in 0.73. For Y, the contribution is 56, and we divide it by our direct material cost, which is 68. This gives the contribution per direct material for Y to be 0.82. For Z, the contribution is 55, and the direct material is 90, which results in the contribution per direct material to be 0.61. And while ranking, we do it from highest to lowest. So the highest is for Y, so we prefer Y first. Then the second highest is X, so we prefer X. And then the last one is Z. So our order is Y, X, and then Z. This is our answer. And this is given in option B. So that will be the correct answer. This concludes question number 29. We can now move towards question number 30. Which statements about a budgetary control system are correct? So the first one is it can encourage departmental rivalry. This is quite true because each department will be thriving to achieve their assigned objectives or goals, right? So it might encourage rivalry at some point. And the second statement states that it will always improve staff motivation. It is true that budgetary control system can sometimes improve staff motivation, but we cannot be sure that it will always improve it. Because if there is some unrealistic target set for those staff, then the staff might be demotivated instead of getting motivated, right? So this is incorrect. The third statement states that it will always lead to improved business performance. Again, budgetary control system can sometimes lead to improved business performance, but we cannot guarantee that it can always lead to improved business performance. So the third statement is incorrect. And the fourth one states that it will define areas of responsibility of personnel. This is true because we are assigning some fixed targets, which means that we are also assigning a fixed target for personnel, which will come with some sort of responsibilities. So statement 4 is correct. The correct ones are 1 and 4, which is given in option C. So that will be the correct answer. This concludes all questions for 2022 October-November Paper 1-1. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.